Welcome back. So the market for now, right, is very, very quiet, and we like that. I mean, after what we've seen in the last couple of days, the bulls would take this with both hands. But let's get talking about individual stocks now. Anupam Rasayan is the stock in focus. If you've tracked the stock in the last 1 month, you'll notice that it's had a 20% surge, and the company plans to commercialize 6 to 8 molecules every year in its high-value fluorination business. And the total potential in fluorination chemicals is indicated at about $260 million. So to discuss more on this and the capex plan, we are joined by Vishal Thakkar, who is the Deputy Chief Financial Officer at Anupam Rasayan. Vishal, thanks a lot for joining in. Just let's talk about the fluorination business, right? You have plans to commercialize 5 molecules. Tell us, what is the total revenue potential from these molecules, and how much of that will come in FY24 itself?
First, good morning, and thank you to get us on your channel early in the morning. Thanks for that. As we have been saying in the past as well, and that's something we have been able to revalidate more often for us now, is that we have been able to look at the fluorination chemistry would give us around about $220 to $250 million of revenue on an annual basis in the next 3 to 5 years. That's the kind of total potential that we are seeing for ourselves in this in this journey of fluorination. The fluorination new chemistry molecules that we are there today, around about 120 to 500, 190 to 150 crores of revenue comes from fluorination chemistry today. In this year, new molecules will contribute further 30 odd crores from the fluorination chemistry. And as we go further, as you also mentioned in your opening statement, that we are commercializing 6 to 8 molecules every year. This year, we are looking at 5 to 7 molecules to be commercialized. This should give me a revenue of around about 30 odd crores this year. And as we go next year, this number should be significantly higher in the 3-digit number as we go further. And over the next 3 to 5, we should be hitting in the north of $150 million plus kind of a number.
$150 million plus in what? In FY24, is it?
What did you? Sorry, I missed you.
I didn't get that. You said $150 million plus. What kind of a timeline are you looking at?
Next 3 to 5 years is what the ramp up will be. So what will happen is that the products gets commercialized now or in next year, large part of them, but that will take its own time to ramp up. And every year, so let's say this year we are commercializing 5 to 7, which will further get ramp up over next 2 to 3 years. We'll commercialize another 6 to 8 next years, which will ramp up over next 2 to 3 years. So when you look at it, they all get accumulated as you go. And that accumulation over next 3 to 5 years, where we end up, let's say on an annual basis, we should be looking at $150 million of kind of a revenue by that time period.
Okay. So Vishal, what's the bigger game plan on fluorination? Clearly you are putting monies to work. If you could also tell us how much capex over the next couple of years in growing this business, and how much that increases your total capex by. And also, what's the market share you're targeting? There are other players as well. So why this thrust on fluorination? How do you see the benefits coming in, perhaps on margins and profits?
Perfect. So let me divide it into 2 parts. First, the question that you've asked is about the capex. And on the capex, what we have said and what we've guided also in our analyst presentations also and reportings as well, is that we are looking at around 670 odd crores of capex over next 12 to 18 months time period, of which 250 will go for my LOIs and contracts, because that also needs the servicing. My LOIs and contracts should be giving me around about 470 odd crores of revenue on a peak, and for that I will need around 250 odd crores of capex on this. And the balance 420 odd crores will go for my fluorination blocks, 2 fluorination plants that we are setting up, which will give me another good high revenue multiple of more than 2x, 1.75 to 2x revenue terms that I would see from there. So that's what we are talking about from my fluorination capacity. This total capex should take me to a revenue, asset turnover of more than 1.75 on an incremental basis, on a blended basis, more than 1.5, but eventually should be where I should be looking at for myself. That's the first question that you had asked. And On the second question, if you can just repeat again, I can answer that better.
I was just talking about the competitive intensity in this space in fluorination. There are other players, so you know, how are you going to sort of look at that?
So on the competitive intensity, see, one thing you want to also see that look at the total world market today. Large part of the fluorination and the specialty chemicals was coming from Europe, from Russia and Ukraine part of the world, and from China. And if you look at what the world has evolved to, looking at what Europe is going off the market in terms of their competitive advantage from the cost structure that they are now looking at compared to what was pre couple of years back. If you look at Russia, again, the similar situation, and the preference of India over China has also come into play. So if you look at all the three and look at the kind of demand, if you see the demand that we are talking about, I don't think any of us, the players who are right now in the country, be it me or my peers, I don't see that we are either of them competing really for the same molecule or same this. Yes, on a larger scale, you can say that, okay, the fluorination chemistry is where we are all playing around. Yeah, that's true. But if you look at from a molecule to molecule competitiveness, I don't think either of us are competing with each other. Look at just the market, right? I'll just talk about the fluorination in terms of polymers. Polymers is an $8 billion market. Now, of that $8 billion, even if you look at whatever as a multiple or as a contribution of an intermediates, even at a 20%, if we're talking $1.6 billion market.
If you can give us
either of us are really competing with each other on that.
Sure. If you can just give us two quick numbers, right? Because we're trying to get just get a handle on what will happen in the near future. In FY23, where will your revenues be? You've ended FY22 on a base of around 1,000 crores or so. FY23, what are we looking at? FY24, where will the number be? And this historical growth rate of 25 to 30% on the top line, is it something that you can continue?
Okay, so I will not be more specific because I'm round the corner on the announcement dates. But let me give you a more secular number and a more near term to longer term time frame. And I would say that we will continue to be in the journey that you have spoken about. 25-30% is the kind of numbers that we are looking at from a revenue growth perspective. I think we should be able to look at those numbers, and we should be able to maintain our margin profiles that we have been mentioning in the past as well. So I don't see that stopping. If you look at from the kind of interest that we are seeing from our customers, current existing customers, and customers with whom we are really having our very active conversations, we see a lot of confidence there. So to our mind, that 25 and plus % growth rate, we feel very, very comfortable that we should be able to achieve it. Now,
okay, all right, Vishal, we will wrap it up on that note for this conversation. Thank you very much for giving us some insights into why the company is looking at the fluorination space in a big way. Thanks very much. That's Anupam Rasayan. Okay, let's get back to the market conversation. The market continues to be in a fairly tight range. That's what's playing out this morning. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, is with us on this leg of the show. Gautam, first of all, I think congratulations are in order, because I very clearly remember the last conversation that we had when you were on the channel, and you were very cautious. You were talking about downsides. You were talking about levels like, I think, 17,300, 350. Now, all those levels have come and gone. They've all been broken. What happens now? Do you think we are ripe for a bounce, or do you still see more weakness?
Good morning. Thank you. Well, as an analyst, you have to call a spade a spade. I think that's our job. And I think the evidence that we've seen on the table for the last 2.5 months clearly suggests that this is a classical downtrend in every sense. I mean, look at the kind of weakness the market sees on the down days, the momentum, the participation, the volume activity, and, how fragile the market looks, on the up days. In fact, hope is sold and marketed, while the markets go through that mini pullbacks from time to time. But resistance levels have come in and, protected the downtrend every single time. So even as things stand, there are no signs of bottoming out. I think the break of 17,300 is a very important development from a medium-term standpoint. The kind of participation that we've seen from Reliance Industries and Bank Nifty in the last few sessions is not good at all. So I do believe there is more downside. There is some minor support around 17,100. But I think for a very long time, we have been working with a minimum target of about 16,800. So I think we are going to get there. Another big problem was that India corrected almost on a standalone basis till a month back. So we had our own issues to deal with, and now with what has happened globally around the SVB episode, things look quite ugly on the global markets as well. Put together US and Europe. So things don't look good. I don't think this is going to resolve in a hurry. Expect a lot more weakness before things get better.
Okay, so it could get worse before it gets better. We definitely don't like to hear that. But when you say it could get worse, right? I mean, what are the levels that you're looking at? You briefly mentioned on the Nifty. You think this recent low of 16,800 thereabouts is something that could be taken out very soon? And I'm more concerned about the Bank Nifty because now trending well below that 40,000 level. Do you think it could be the leader of the next leg of the downfall?
So it's already been the leader on the downside on the bank. Look at the action of the last 2.5 months. And I think it's going to get a lot worse because when I look at the Bank Nifty chart in the context of the rise of the last couple of years, I still feel that there is a lot more weakness. And Bank Nifty breaking 39,600, and if it were to sustain below it for a couple of days more, I think there is easily another 2,000 point downside coming in there. So 37,500 is my number on the Bank Nifty from a medium-term standpoint. And if that number were to come by, it will obviously impact the Nifty. But yes, coming back to the Nifty, 16,800 is indeed a very important support. I'm pretty sure that we are not going to pierce through that number easily. There will be some support, there will be some stopover at that point. But if I have to take a slightly medium-term view, I wouldn't be surprised if the Nifty eventually goes down to levels closer to 16K. So that's probably the reason I say that the risk-reward is still in favor of selling in case of any pullback.
Yeah, but the pace maybe, what's the pace you're expecting, Gautam? Hi, morning. And as Surabhi said, you've got it absolutely bang on. So congratulations. But a lot of it is about timing as well, right? Are you expecting these kind of episodes, which they come once in a while, the bank issue, it kind of sort of does things very fast, right? Helps things on the way up or way down very fast. But if this were to pass and not fester, the underlying structure is weak, as you're saying, has been weak for a while, even before this. Will the pace again go into slow mode? Lots of sort of intermittent rallies, which gets sold into. I mean, it goes back into slow motion in that sense.
Prashant, the beauty about excuses is that they are always unforeseen till they actually happen. And I think the beauty of technical analysis is that we are able to get a hang of something wrong being somewhere, looking at the demand-supply situation. And that's been the case for India and for the rest of the world. But I think let's not forget the first half of March was actually very boring. I mean, you had a scenario where India VIX was at a 52-week low 1 week back at 12.5. And even today, India VIX is somewhere between 15 and 16. And my experience of a couple of decades tells me that markets usually don't bottom out till you see a surge in India VIX well into the 20s. So I think the pace has only increased now. I think this is going to be a trending market. It's not going to be a boring market anymore. You will see pullbacks from time to time, no doubt about it, because the market will try to confuse. There are just too many things happening in the world at this point of time, but the trajectory will stay down. And I think below 16,800, there are just no numbers still about 16K. So for now, let's just prepare for that number and then we take it one step at a time.
Okay, Gautam, we will leave it at that. Thanks a lot for joining in and giving us your views. This is a market that could get worse before it gets better. There's still a lot of caution, at least that's what the charts are indicating. So we have to perhaps brace ourselves for more pain or maybe more patience, perhaps. Divgi is a stock that's going to list now. Divgi Talk Transfer System. Okay, actually I forgot the second part of the company name, but that is an auto component player. It's it's got a good listing, 5% higher.
5%. And imagine it's listing against such a backdrop, such a tough market.
It hasn't listed yet. There's a minute for the listing, but in the pre-opening
the pre-open sort of exchange rates that we were getting, but which is suggesting a 5% pop. I think we'll get the final rates in. But Sonia, you were telling us that it's a company that's really focusing on the EV space in a big way, and it's got a lot going just in terms of pure fundamentals, not getting into the pricing, and maybe that's what's working.
That is, and this entire space, right? The auto component space, especially the focus that is on electric vehicles, the companies that have the electric vehicle focus, they're doing quite well. So Divgi has very stable financials. The compounded growth rate for the company has been over 20% in the last 4-5 years. It's a debt-free company. The subscription was not great, actually. The IPO was subscribed about 5.5 times overall. I mean, compared to some of the recent subscriptions, not that great. But it's a decent company. It develops, manufactures a lot of EV components, and it has presence in across the world, USA, China, Korea, etc. The only problem is, and it has some marquee customers, Tata Motors, M&M, global suppliers like Borg, Warner, etc. The only problem is it has high concentration in some of the markets that have been under pressure, so markets like China, and it has high customer concentration as well. It gets a large chunk from just a few customers. So those are a few issues for Divgi. But other than that, the company is good and it looks like it's going to be a decent listing. But for the market, okay, just about 10 seconds left, so we'll just wait by for that. That's Divgi Talk Transfer Systems. Okay, that's the first stake, and we'll get the stock up for you on board. Remember, they have many segments actually. Okay, it's a 1% higher, I think. So, muted listing at the best. 1% higher. But given the way the market has been going, I guess Prashant, all smiles.
Absolutely. I mean, the market's not that bad, right? 25 points.
See how happy we are. Today it's not that bad.
Imagine 25 points up and we're saying
and
it's not a bad market, it's a good market.
You know, by the way, market breadth is, keep an eye out on this one. Market breadth is flipped into the negative. I mean, you've got 1,100 stocks lower and about 900 stocks which are higher. Yesterday it flipped early on and then it kind of kept going in the other direction. The broader market, there has been a little bit of pressure. The other thing which I highlighted right at start is, of course, what's happening with the Adani Group stocks. And, this is a pack which is important from a retail sentiment perspective. After many days of repair on many of these stocks, them doing quite well in terms of recovery from the lows, they are seeing, this is, I think, the first time that they are, post this recovery, they're reversing. Enterprises is down 6%. Power is down 5%, transmission is down 5%, Wilmar is down 3.25%, and Adani Total is down about 5% as well. NDTV, I mean, that's also an Adani Group company, 5% lower. So I can spot actually lots of these names on the downside from that one group. Coforge is another one which is down 4.25%. That's a big move on Coforge. Stocks at about 39.15. And we got CG Power, which is down about 2.25 as well. Volumes, I mean, I think even it's early, just not been an hour since we've started trade, but volumes are tracking a little on the lower side. Take a quick break. We are coming back in a bit, but just a quick programming reminder. CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and ensure we take a decisive step towards bridging gender inequality. The event starts at 4:30 p.m. and we'll bring you the live coverage right here on CNBC-TV18.
Well, it's flat for the market, but let's find out if that's the case in the commodity space as well. Manisha Gupta is joining in. Manisha, good morning. What's happening there?
Thank you for that, Sonia. Well, I'm looking at the gold and silver prices because in all the sell-off and turmoil and risk aversion, this is one sector which has continued to gain up some bit of a pressure coming in for this one as well. We were trading at $19.12, so we are $10 down from those levels, but still holding above $1,900 per ounce. This is a 6-week highs that the gold prices are trading at right now. And if you look at the prices, we've seen $100 of a jump up in last 5 trading sessions itself. That's exactly when the problem started to come out. The markets have seen good gains in this week and on a monthly basis as well. While in the few days ago, we've seen weak US dollar, slide in treasury yields as some of the factors which have been supportive for the gold prices. It also is about the US bank crisis, contagion fears, and global recession concerns, which are adding up to safe haven buying in case of gold there. The central banks have continued to buy gold, and within this as well, there has been a huge buying from China, Europe, and Russian banks there. Singapore as well adding to its gold reserves. So the central bank buying has been one major theme into this one. If you look at the US Fund futures, we have, as of now, this is as of today morning, a 69% probability of a 25 basis hike, and there is a 31% probability now of a pause in rate hikes as well. And that's exactly where the gold prices seem to be taking all the support from. This is what we've done on a week-on-week basis. 5% gains in gold, silver is up 8%, 6.5% gains in platinum. There are not too many asset classes that you can brag about have done that kind of strength in the last 1 week itself. In the metal space, copper has seen a gain of more than a percentage point as well, but most other asset classes and metals actually have seen a decline come in for this week. What the street is watching out now for is the US inflation data that comes in the day today, and then this is going to be the most important one ahead of the US Fed meeting, which is on 22nd of March.
Okay, all right. Thanks for that, Manisha, for all the details in the commodity universe. Let's look at a couple of stocks that are making it to the headlines as well today. One of them is Krishna Diagnostics. Ekta is joining in. Ekta, tell us more. I think this company's really been in the news on the back of, the tender they have or the operations they have with the BMC. So what's the latest?
Well, yes, Surbi, this feels like deja vu because I've been talking about the same tender, and this is the third time that I will be just in the past 10 days. That is because they've operationalized another 100 centers which comes under this BMC contract that they had won in Jan 2023. So they seem to be on a rapid pace in terms of operationalizing the centers within this particular contract. They had announced to the exchanges on the 6th of March that the first 100 pathology centers were operationalized. They followed it up on the 10th of March or thereabout that another 100 were operationalized, and now they informed the exchanges last evening that another 100 were also operationalized. So a total of 300 have now been operationalized. They will be conducting some amount of pathology tests for them for BMC on the basis of this contract that they had won. It is a public-private partnership, and there is a total of 600 collection centers that they will be operationalizing under this particular contract. They've done 50%. I assume that the next 50% based on the rate that they're going will be soon enough as well. So that's the reason why the stock continues to be in focus today.
Okay, thanks a lot, Ekta, for that. Well, Sona BLW is the other stock that we've been tracking over the last 48 hours. Now, the stock had a brief fall yesterday because Blackstone has exited Sona BLW completely. But today the stock is rallying, and we covered this yesterday where we said that the business is very strong. It's become, it has a big focus in the electric vehicle space. This morning, CLSA put out a note. They cut their target price to 529, which is still well above the current market price. And they say that Blackstone's the stock's recent decline is due to concerns over continuity of the management post Blackstone exiting. But other than that, Blackstone's exit has not changed their thesis. The business is very strong. The order book has improved quite a bit, and the margins are likely to rise. In fact, we thought we'll just put some numbers to that. In Q3, Sona BLW saw its highest ever revenue, EBITDA and net profit in a single quarter. The revenues went up almost 40%. And if you look at a 5-year trajectory, right, it's been a compounded revenue growth of 34% that Sona BLW has seen. Just look at the charts on your screen. Revenues 5 years back was just 600 crores, and now it's gone to almost 2,200 crores, and similar with the EBITDA. It's now become one of the largest EV technology players. It supplies EV transmission gears, EV traction motors to a lot of OEMs globally. And the revenues just from the battery segment have more than doubled in a span of 1 year. That's how much they're growing in that segment. And out of the total order book, about 60% now comes from the electric vehicle segment. So there's a big EV story playing out here. So despite the exit of Blackstone, the company's fundamentals continue to be very strong, and the market is recognizing that. Let's slip into a quick break. On the other side, it's our special segment. It's the economy. Lata will get chatting with Soumya Kanti Ghosh of State Bank of India and Steve Englander of Standard Chartered to talk about the inflation print, the SVB crisis, and a lot more. Stay tuned.